If today Vitalik wanna get some advice from you how to make Ethereum great again, what would be your suggestion to him?
Interesting question. I look at Vitalik, I think what he stands for is very idealistic. Sometimes you also have to look at the pragmatic side, which is, hey, the price of your asset is tanking, right?
During the Trump administration, we might see the breakthrough of the real estate and potentially equity. So in that case, going forward, I think the whole crypto world is gonna be on par or even bigger than the AI industry.
Brandon Go started in traditional finance roles at HSBC, Wells Fargo, and Morgan Stanley. In 2021, he co-founded Treehouse, a DeFi analytics platform that raised $18 million in seed funding. Now he's building the fixed income layer for digital assets. From Wall Street to Web3, Brandon is bridging the gap between traditional finance and decentralized finance.
You must be massively curious, right? You now live in a world where you can find anything you want online. And if you can't, you can find the right person. I am of the belief that everything in this world now is at your hands. You can grab it. It's just how much you want it.
Hello and welcome to Build It Up, where AI meets crypto, technology meets humanity, and East meets West. I'm Bill Chen. Subscribe now and be part of the conversation. My guest this week is Brandon Go. He is a co-founder and CEO of Treehouse. Before founding Treehouse, Brandon held fixed income roles at Morgan Stanley and Wells Fargo Securities, focusing on credit, derivatives, and asset-backed securities. Good to meet you, Brandon. Thank you for joining us.
Yeah, sure. Hey, thanks for having me on, Bill. It's nice meeting you.
Let's start by first question. So could you introduce about what does Treehouse stand for and what would be your 30 seconds pitch to a normal user?
Treehouse started when I was still in Morgan Stanley. So that was my previous job before I started Treehouse. By day, I was trading fixed income products. And by night, I was a degenerate. I was on DeFi. I was doing all the earliest protocols. We couldn't really say we were trading crypto because we were working at MS. We used the term the dark forest instead. So every time we type to each other on Bloomberg, we will be using the term dark forest. So the term Treehouse came out the idea of that if you want to have something very safe in the dark forest, a treehouse can represent that. It can stand for that. So a treehouse is like a beacon of light, and that kind of ties in nicely to the vision and mission of Treehouse, which is like to empower people to confidently navigate digital assets. That's exactly what Treehouse represents. We're here to be a beacon for people to make sense of the space.
Cool. Yeah. So sounds like Treehouse can also present, as a good name if you run a security protocol as well.
Yeah, potentially. Definitely. I think that the book and the theme that we got from is from the Dark Forest. It's a very famous Chinese book, right? So I mean, it
Yes.
ties very nicely to that concept. I haven't answered your 30-second pitch question, so I can do a quick stab at it. So Treehouse, the premise of it is pretty simple. We call ourselves the decentralized fixed income layer. The idea is that in traditional finance, fixed income is 5 times larger than equities. It's way bigger than commodities. But when you talk about fixed income in crypto, it's almost non-existent. So we're building the infrastructure to try and power this whole new primitive. And we're starting by building benchmark rates.
Awesome. So for your online asset, do you primarily build on the auto coin like Ethereum, etc., or you build on the RWA like the treasury bill?
Yeah, so there are 2 main products to Treehouse, one of which is called T-Assets, and the second of which is called DOR. And DOR stands for Decentralized Offered Rate, so it's spelled DOR. Let's start with T-Asset. So I think that's exactly what you were referring to. T-Asset is a liquid staking token with a twist. So we don't touch RWA at this moment, for at least on the T-Asset side. What we do instead is that when a user deposits their ETH, we take the ETH, we work directly with leading LSD providers. So in the case of Ethereum, we work with Lido, and we take that ETH, we move it to WST ETH. From there, however, we do a unique twist, which is that we do an embedded arbitrage strategy on top of that. So there are 3 main features of like what T-Asset represents. The first of which is it's democratized access to this trade. When a user deposits their ETH, they earn not only the Lido yield, but they earn another pickup of close to 1%, and that is through arbitrage. The second feature is a narrative that we're trying to push in that if you get into crypto today and you get into the borrowing lending landscape, sometimes you can borrow from Aave at like 2%. At the same time, you might be able to borrow from a different platform at like 2.5%, right? So the market is extremely fragmented. And by doing that arbitrage strategy, we're helping to converge it. So right now, just to answer your question, we're focusing purely on native assets and really starting with Ethereum. And then the third feature is that T asset powers Door. But let me take a pause there. I think there's a lot to digest.
Let's start by the Ethereum. This season is a very unique season. And a lot of, meme token take off and make, the founders who are building the fundamentals and also the founders, from the Ethereum ecosystem being a little bit, depressed. What is your view on that? And you have been 2 cycles at least, right?
Yeah. No, that's a great question. I think when you zoom out into the space of like crypto in general, right? And I think right now the state of the market is people are kind of afraid of for the state of Ethereum, but I think we really need to zoom out. If you look at the state of crypto in relation to the rest of the world, crypto only represents like 0.4% of the market cap compared to all the other assets that exist out there. It's still a very, very tiny subset.
So
of
what's
it.
the total market cap you're referring for the global wealth?
Well, there are multiple ways to calculate it, but I think of it in the range of around 500 trillion, not including like active like real estate, right? Because real estate is massive, right? If you consider the value of the entire earth. Just
Yeah.
investable asset around 500 trillion, of which crypto is around like 2 trillion, right? So it's a very small subset. If you zoom into that crypto, it's of that 2 trillion, 80% of it is Bitcoin, right? So only really 20% represents the world of DeFi that we're talking about. And if you zoom into that 20%, 80% of that 20% is still Ethereum. So while everyone's like freaking out about Ethereum, Ethereum is still the leader, right? It's really the only layer one that has real native yield. And what I did recently to answer your question is that I went to DeFi Llama and I looked at all the different protocols from top to bottom, from in terms of revenue, in terms of TVL. I kind of sub-segment that into 5 ways of protocols that exist, right? So the first of which is your trading flow, right? So if you're like Jupiter, you're a Uniswap, those protocols do well. The second one, I look at it, it's like leverage, right? Aave is at the top right now. Pendle's up there as well. Right after that, you have layer 1 and layer 2 blockchains. People are getting kind of tired of it already. There's so many blockchains where
Yeah.
the valuation is not even there anymore because there's just so many. The fourth one, which is what you mentioned, like meme coins, there is product market fit for meme coins. But the problem is that if you go to the Sands Casino in the physical world, they give you VIP treatment if you spend a lot. If you trade meme coins, all Pumped Up Fund does is drag you on the floor, right? Because people just kind of insider trade you. So people are getting a bit tired of it. And I think the fifth final one is narrative. So the state of crypto, I kind of subsegment into that. But Ethereum among all of them is still obviously the leader.
If today Vitalik want to get some advice from you how to make Ethereum great again, what would be your suggestion to him?
Interesting question. I would love to hear your answer to that too. But I think I would take it and I look at Vitalik. I think what he stands for is very idealistic, right? When you look at the spectrum of founders that exist out there, there is some that are very pragmatic, very practical, and then you have some that are very idealistic. And I think you can draw that relation to countries even, right? There's certain countries where innovation thrives, right? Like the US, right? You have obviously command economies on the very other side, which is very practical. I think Ethereum and Vitalik has kind of gone to the route where he is very idealistic. It's, hey, laissez-faire, it's free for all, it's the market will come as it goes, and innovation, and we shouldn't step in too much because we'll let it kind of thrive on its own. What I would say to Vitalik is that being pragmatic and being idealistic is not mutually exclusive. You can be both, right? You don't only need to only focus on the idealistic part. That's great. He's done an amazing job. Sometimes you also have to look at the pragmatic side, which is, hey, the price of your asset is tanking. Maybe there's something you need to do. Maybe you need to step in. Maybe you need to help support the ecosystem a little bit. So it's like Republican and Democrats in the US, where some people say, hey, less government intervention. And the other side's like, oh, we need to be a safety buffer for anybody that falls out the crack. We need to provide support. I think it's okay. You don't really have to pick. You shouldn't be bounded by one, right? You should be able to traverse between the two. So that's what I would say. But I would love to hear your thoughts, actually.
I agree with you. My feeling is Vitalik put too much weight on the decentralized ideology. Don't want to deal with the practical stuff which most of the people care, like the price and also like how you can take the leverage of the popular narrative, like, US narrative, right? If we take a look, all the leaders who went to the White House, Vitalik was not there, but Solana was there. I think Vitalik is like ideologist. In the end of the day, as the operating system of the future, the developers, the users, and the use case are the end goal, right? Whether you are centralized or decentralized, it's just a sort of a path to achieve your end goal. And I think sometimes centralized will bring you way more efficiency as compared to decentralized. The culture of the Solana is still very execution driven, right? Very opposite as compared to all the Ethereum foundation. I think that's another point if we can observe.
Yeah, I completely agree. I mean, you don't have to always hold so strongly to one side, right? If you treat Ethereum as like a country, requires you to step up in other means, and it's okay to be less idealistic, right? And step in and provide support, right? I mean, I think they are trying, right? A few months ago, they started deploying their own treasury for the first time ever. They deployed some money into Aave, a very, very safe strategy, but at least they're doing something. And then, of course, they also replaced their leader, right? And then they also announced Etherealize, right? So it's like a more of a commercial arm. So I met Vivek when I was in New York a few weeks ago, who's leading Etherealize, and they're doing a lot of interesting things there. I think so. That's a good step. But yeah, Vitalik ultimately is still the leader, right? The founder. So everyone's still looking
Yeah.
to him, and it would be nice if he does have more the other side too.
Yes, yeah. And come back to your product. How do you see the differentiation or competition between, Treehouse as compared to like Ether, Renzo, or other either native token protocol or RWA?
Yeah, so we're completely different from the LRT landscape. So some of those names that you mentioned, right? LRTs are effectively like ETFs for EigenLayer and Symbiotic. Whereas Treehouse, while we are both in the ETH native assets, right, we're actually complementary to each other because we're talking to EigenLayer. Potentially users would be able to take TETH, which is the asset that we have, and stake it into EigenLayer. So that means these LRTs can even hold TE. So we're not competitive, we're actually complementary. And the key distinction is that TE is not just providing users yield that is coming from EigenLayer or coming from staking, right? Which is from an LSD perspective. We do the arbitrage strategy that I mentioned. So we earn users yield on top of that. Again, the bigger narrative that we're trying to say is that if you want to build a fixed income layer in DeFi, and like I mentioned, traditional finance fixed income is 5 times larger than equities or anything, right? It's the largest asset class. You're going to need to be able to converge all the inefficiencies in the market, and TETH is doing just that. The more unique proposition of Treehouse is actually DOR, decentralized offered rates. And I'm happy to share. I'm sure you have a lot more questions, but I'm happy to share a bit on like what we're doing there.
Yes, please. So could you elaborate about the dual?
Yeah, sure, for sure. So, the best way to explain DOR is to look at it in the context of traditional finance. So, our view is that looking at the history of crypto, right, starting from Bitcoin coming out, we had Grayscale, GBTC, then we have like BitMEX launching perpetuals, followed by Binance, right, Bybit, and all these guys. And right now, the next innovation has been ETF. But throughout that cycle, we've missed a whole asset class, which is like fixed income. And what is that missing piece? We think it's benchmark rate. So DOR is a decentralized benchmark rate. And how I explain it is to, again, I said, explain it from a traditional finance perspective. So let's go back to the 1980s, right? In the 1980s, the fixed income market was big, but it wasn't as big as it is today. It was the same size as equities at that point in time. If you get like any kind of fixed income loan, you can get like go to your bank, and any bank that you go to, they'll give you a term sheet, like a piece of paper, and there'll be a reference rate, basically a benchmark rate on it. It was very, very fragmented, and that made it problematic for people who wanted to hedge out. If I wanted to close a position and move to a different bank, the methodologies that were, even though it's the same instrument, they were using different methodologies to calculate it. That all changed in 1981 when LIBOR was born. So LIBOR is the London Interbank Offered Rate. When LIBOR was born, you could see immediately a hockey puck in terms of new fixed income instruments that started existing. The year after that, interest rate swaps were developed, what I used to trade back in the day. Mortgage-backed securities were developed a few years later, and then you just see so many more instruments coming out because of a standardized benchmark rate. So coming back to crypto, we think that in order to build this layer, we need a benchmark. And because crypto and Ethereum is decentralized, We think we don't trust a centralized authority to build a benchmark rate, trust a decentralized version. So what Door has built is that we've taken the principles of LIBOR, of how you build a benchmark in traditional finance. We've also taken inspirations from SOFR, which is another benchmark. We built it in the form of a Chainlink Oracle. So we actually work with Ben Chan, if you're familiar with him, CTO and head of engineering at Chainlink. Um, uh, and we've also added the concepts of staking, slashing to solve issues of collusion, and also introducing different counterparties that work together to help power this benchmark. So without going into the details of all the players, effectively, when a user queries that Oracle data, there's a bunch of players that are decentralized to make that a reality. And that will then help power new instruments, new primitives. We're starting with like forward rate agreements. So we have a partnership with FalconX. We're on track to hit 1 billion in trading volumes of Ethereum staking rate forwards, which is extremely exciting. People don't really see that because it's not really a retail product, but that is like the very fundamental instrument to bootstrap a whole fixed income market. At least that's how it happened in traditional finance.
Awesome. So on top of that, you're building a LIBOR on the DeFi, and it's going to be the backbone of the DeFi world in the future. And how do you envision the whole DeFi in the next 5 years, regarding the size, the breakdown? How do you see, how much is going to from the RWA or from the native asset?
Yeah, that's a great question. I think I would go back to the analogy of the visualization that I gave earlier, right? Say crypto is just 2 trillion in this giant economy. There are really 3 ways for it to grow. One, the bubble has to grow intrinsically. That means the products that are launched on there have to intrinsically bring value, just the same way in the traditional finance world. If you invest in like a clothing company, it brings value, and then there's dividends, there's sales. That has to grow in relation to the rest of the world, right? The second way is through inflows. So money can come through ETF, it can come through other means of just new retail people putting money in. That bubble will naturally grow. I think the third and easiest way for the space to grow is to actually bring on the rest of the world's assets. There's 500 trillions of assets, and to bring it into this bubble. And the biggest pie, the easiest pie to do that is fixed income, right? Again, I talked to Etherealized about this. They're also fully focused on fixed income. If you think about stablecoins, which is such a big piece of the DeFi world, it's like 200 billion. It's grown doubled in the past 1 year. That is actually like liquid treasuries. People see it as a stablecoin, but on the back end, it's actually a fixed income product that is powering. So I think the fastest way for it to grow in not even 5 years, I think it's going to take like 1 to 2 years for more and more RWA assets to come in. I was recently in New York. I met BlackRock. I met, all the different crypto guys that are trying to bring RWA on. They're all focusing on that securitized. The problem, however, that I think we need to solve to get to that point is that once you bring on these assets on chain, what can you do with it next? I think solving that problem is very, very important. And I think, people are finding it hard because of like regulatory reasons. Being able to do like leverage, being able to trade it, those infrastructure needs to exist. And where Treehouse fits in there is that, Door is that bridge for fixed income products where we can help build benchmark, we can construct yield curves for you, just the same way traditional finance does it. Well,
Yeah.
what about you? I'd
You,
love to hear your thoughts. I know I've been answering a lot of questions, but I would love to hear you too.
my view of the DeFi, I think going forward in the majority is gonna from the RWA or might be some kind of like a hybrid species. If we take a look of the financial asset, the number I am referring is from Michael Saylor, is around 900 trillion for the global wealth, including the real estate. So it's going to be right now we have 300 trillion real estate, 300 trillion bond, 130 trillion money, around 120 trillion equity, etc. Having said that, in past 15 years, there's only one RWA, which is the money on chain, right? 200 billion. But that one, is exponentially growth in past 15 years, mainly in the frontier market. But going forward, I guess, from the developed market as well. And after, we began to sort of cryptonize the money. And then I think past 24 months, we have come across bond on chain. And I think during the Trump administration, we might see the breakthrough of the real estate and the potentially equity. So in that case, going forward, I think the whole crypto world is going to be on par or even bigger than the AI industry. Before, I think it's just a niche fintech industry will not be as big as AI, because AI basically is enable every single traditional industry, right? But on the flip side, crypto will sort of redo every single asset class from money to equity. So in that case, crypto is even bigger than the AI. On top of that, I think the regulator is still hesitate, especially in the two most hardcore asset class, which is the real estate and the equity.
No, I completely agree. And I mean, regulators are concerned for legit reasons, right? If you kind of let a libertarian world where everything goes freely, you might see someone leveraging their house, like looping it like 10 times. So I guess
Yeah.
they need to have some kind of control. If not, people naturally, as they always do, go crazy, right? Go
Yeah.
degenerate. But I completely agree. I think the future is where crypto becomes synonymous with just finance, right? Valuing
Mhm.
assets in general, where crypto is just the backbone. And the best case is if it's abstracted away of people's mind, that it just becomes so common that you don't even think it's crypto because it's the underlying technology, and retail just kind of uses
Yes.
it for what it is.
Yeah, yeah. Like, now most of the finance industry is enabled by the IT technology, right? But going forward, like in every asset class, we're enabled by the crypto by default. You mentioned you met with the BlackRock. I have a question regarding BlackRock. What is the BlackRock motivation to promote the RWA? For the BTC ETF, I understand because AUM is their bread and butter, right? But come back to the bond. They have the accessibility to all the global institutional investor, and they are managing 11 trillion already. So, what is their motivation for the RWA? Do they want to promote this for the efficiency and the lean operation wise, or do they think this one will also expand BlackRock market share in the future?
I don't want to speak for BlackRock's behalf, but what I would say is that the people that are working there firstly are proper crypto guys.
Mm.
They've set up a big division, and they look at crypto and they understand the premise, right? They see it not just as access, which is one bucket ETF, right, allowing users and retail to get involved. If you look at just the ETF segment itself, that has been the most successful ETF launch ever for BlackRock.
Yeah.
So that's huge for them, and they say, hey, let's not stop there. There's other buckets that BlackRock, being massive already, can go after. And I think, just my view, not speaking for them, right? Stablecoins a big one for them, right? Just looking at it, and I think even for all the other banks that are out there, once regulations a bit clearer, I think there's still hurdles that stops all these banks from being able to issue stablecoins because of what has happened with the new U.S. administration, right? There has been almost like a competition and a rush for people to say, hey, when regulations open up, we cannot lose out, right? We can't just be using these old systems, right? We need to be comfortable with potentially using the fast system of the different networks, the Stripe network. They want to kind of move over to, hey, potentially it's ran on blockchain, right? And they don't want to lose out. I think RWA is definitely a third focus because, again, looking at scale for crypto, native assets being just such a small bucket, and then the number that you gave was like 900 trillion. That's a no-brainer for them. Being able to help facilitate that flow, I think BlackRock wants to get involved. Can't speak for them too much, but they are definitely looking in that domain.
Makes sense. Yeah. If the end goal or the vision is, enable the global 5 billion daily internet user who are Android user by nature, right? Enable all the global mobile internet user can use the US dollar or Euro dollar, whatever they want on chain, and also can invest in the treasury bill on chain, and also, can own a piece of, Android or Google or Apple or whatever stock they like. I think that would be potentially an end goal to democratize all the financial tool to the global population as long as you have a cell phone. And maybe that end goal can be only achieved and facilitated by the blockchain technology.
For sure. Yeah. I mean, that's the ideal world, right? I mean, we hope to get there. I think what the concern is for these banks, I also met some of the banks when I was there, is the regulatory concern, right? Ultimately, regulation can do two things, right? It can hurt and it also can help. So I don't exactly know what that future would look like, but for sure, it's RWA is going to grow massive, and
Mm.
that's one of the biggest ways for crypto to grow. And yeah, I think it's a train that can't be stopped.
Yeah, yeah. And how do you envision Treehouse in next 3 years or 5 years?
We're still early. I mean, as mentioned, within the native world of crypto, like the $2 trillion, right, in value,
Mm.
fixed income is still such a small subset. So we're targeting the biggest segment within that 2 trillion, which is e-staking. So our pitch to staking houses, so we work with a bunch, is that right now everybody just stakes the ETH and it sits there and you earn like a daily variable rate. But in the traditional finance world, right, staking, the equivalent of it is like interest rates. There's a whole spectrum that you've missed out. You've only touched the surface, which is the spot, right? I envision in the next 1 to 2 years where staking houses would offer their clients the ability to lock in rates, to do like a covered option, to do interest rate derivatives across the curve. Once you build this yield curve, the world is really opens up. So I think within the $2 trillion market, that is our main focus. We're also going to be touching into Solana. We work with some of the foundations as well. And I mentioned earlier, we're working with like Falcon X to launch a whole new product to help build this yield curve. We're working with a bunch of staking houses. We're working with one of the protocols that launched ERC-6123, which is interest rate derivatives that can settle on chain. We're working with like custodians that are trying to bring on stuff, RWA change like Plume. So that is where we're focusing on. But I think where we also want to be in the longer term, right? This is more the short term, is that as RWA kind of starts entering into this realm, or when it starts, the line becomes a bit more blurred, Treehouse and Door specifically can be that bridge. So as an oracle to help bridge on, to help build yield curves for interest rate products that are going to be on chain. When you do that, you can't just move it on chain, right? You need to have an oracle, you need to have specialized oracle that can help power fixed income products. And that's our niche focus. That's exactly where we're trying to target. I think, again, among which asset to come first, it'll be fixed income products, and it'll be fixed income products that are very, very short dated to start. Just looking at the money market world, just treasury T-bills, that's like a $9 trillion market already, right? It's already 4 times bigger than crypto as is
The current
today.
market
So
cap. Yeah.
exactly. So just being able to capture those elements and being able to power that. So we want to be the infrastructure to help bring all these assets on. And while it hasn't fully happened yet, it hasn't gone to that scale yet. We're targeting within the bubble, e-staking, building out that yield curve, and then as RWA come on, being the infrastructure to bridge.
Do you see Treehouse as a sort of index or protocol company who provide, the S&P 500 index or Russell 2000 or LIBOR, or you see yourself as a on-chain BlackRock, or both?
That's something that we've always thought about, but how we've done is that we are working with names like CoinDesk indices. We're talking to like Bloomberg indices, and we're not trying to be competitive with them. In fact, we're trying to say that, hey, for some of the indices that you have, we can help power the system. We can decentralize it. You can use our infrastructure to power yours, and then to bring it on chain. So to treat us like your distribution channel to enter into the on-chain world. So we can build indices. Door as an infrastructure, it's really just a framework. So whether we build it or other people build on top of it, we tend to kind of be on the idealistic side, similar to what Vitalik's doing, where we want to give this framework an open source framework for other people to build on top. And we're already seeing that. So we're going to announce a few big names over the next few months, very, very big traditional finance names that are going to be using our system. We're doing some partnerships as well. We're also working with several hedge funds, some in traditional finance, some with regulated funds that will be using our system to power the benchmark. So we have the flexibility, but we tend to want to partner up with people and let our infrastructure be used.
So my last question, for the young generation who wanna break into the tech industry, fresh graduate, what would be your advice to them?
I guess this advice goes for any breaking into anything, right? Ultimately, as a student, even for me, when I first graduated, I broke into like the investment banking world, right? The first thing is that you must be massively curious, right? You now live in a world where you can find anything you want online. There's 2 things. You can find it online, and if you can't, you can find the right person. And then the second thing is, right, hard work, right? You got to keep pushing. You actually have to know your stuff. You have to get there and just keep pushing, keep trying. I'm of the belief that everything in this world now is like it's at your hands. You can grab it. It's just how much you want it. Well, what about you? What would you say to the fresh grads of this generation?
How to raise a question, by the curiosity would be a very special thing. And also on top of that, I want to also share with the other people, if you can tell the mega trend and jump into the mega trend at the early stage, I think that will be super important. That one is sort of a byproduct by the curiosity. I think, in the end of the day, every individual is very tiny in front of the big industry and the big paradigm shift. How you can leverage some mega trend would be super important
Catching
for
the
personal
wave
growth.
is very important. Yeah. You can see all these
Yes,
waves
yeah.
coming and being able to jump on the right wave.
Cool. Well, thank you. Thank you, Brandon, for your time, and I really appreciate. Hope you have a good day, and let's keep in touch.
Yeah, for sure. Really nice meeting. Thanks for having me on, Bill.
Well, that's all for today on Build It Up. We'll be back next week with another inspiring guest. Subscribe now so you will never miss our amazing conversations. Until next time, this is Bill Chen. Goodbye and take care.